for Small Talk with Katie and Kevin, where we discuss issues that small business owners are facing today.
Are you cheating the government? When are you liable for employees? Do you know when you have an employee or independent contractor? Well, today we're going to discuss those topics.
According to the Bureau for Labor Statistics, in 2005, 10.3 million people were working as independent contractors, making up approximately 7.4% of the employed population. One federal study concluded that employers illegally passed off 3.4 million regular workers as contractors, while the Labor Department estimates that up to 30% of companies misclassify employees. Many workplace experts say a growing number of companies have maneuvered to cut costs by wrongly classifying regular employees as independent contractors, though they are given assignments and treated as regular employees. Even though employees recognize that such practices may violate common law, they are reluctant to challenge employers' authority due to the tough job market.
Lucky for you, earlier today I had an interview with Emily Floto, local business owner, and she's going to talk to us more about the differences between employees and independent contractors.
Hi, I'm Kevin, and today we have Emily Floto, local business owner, and today she's going to help us learn more and decipher between independent contractors and employees. Emily?
Well, from what I understand is that an independent contractor can be hired just outside of your company, and they're not included as a permanent employee of your business. So they're not on your payroll, and they're not receiving benefits that current employees receive.
So how do I know if I have an independent contractor or an employee?
Well, there's two tests that you can look at, kind of. The IRS has a 20-factor test, and this includes things such as method of payment, provision of tools and materials, like if they're using your tools or their own personal tools, investment in facilities, working for multiple companies, if they're working for many companies around the area, if yours is the only one that they're working for. So it kind of just gives you a basis to determine whether if they are your employee or an independent contractor.
Do you have to meet all of these 20 factors?
No, you don't. You don't have to meet all 20, and one single factor, such as method of payment, determines if they're an independent contractor or an employee. The IRS is actually the one that weights each of these factors in determining which will make the decision for you. There's another method that common law just requirements that they propose in deciding between these two employees, and you must display three characteristics. There's behavioral, financial, and relational. And behavioral characteristics are basically who decides how the work is done. Like, if you ask me to build a pool, do you tell me which cement you want me to bring in and how you want me to mix the cement, and basically details like that. Financial is who pays the expenses. If I pay for all of the direct materials that go into it, and then I just have you write me a check for it at the end, or if you're buying and providing for the materials, determine kind of who is the independent contractor or an employee. Also relational, if I'm employed for just a specific project, or if I'm kind of like on your staff as an independent contractor for a long extended period of time, then I might be considered an employee versus a project by project basis.
Interesting. So let's say I'm a local business owner and I'm unclear as to whether I'm an independent contractor or an employee. What are the routes I can take to figure that out?
And this is also a very tough distinction to make. Sometimes it's unclear, and it's better to seek additional assistance than just to assume that they are an independent contractor and then get in trouble later for it. There's actually, on the IRS website, there's Form SS8, which you can fill out, and it's the determination of worker status for purposes of federal employment taxes and income tax withholding, which are the main issues that the IRS is looking at. And so that can be filled out and filed either by the business or by the worker, and then the IRS will review the facts and the circumstances, obviously, because every circumstance is different, which is also why the 20-factor test isn't a comprehensive list, and you don't have to meet every single one, just because all circumstances are different. And so then they'll help you determine and contact you and with their decision of if it's an independent contractor or an employee.
Awesome. Well, thank you for your time, Emily.
Yes.
And Katie, back to us.
Wow, Kevin, that was a really interesting and informative interview.
Yeah, it was great. Well, now now that we know more about employees and independent contractors, let's go to Emily, one of our traveling reporters in the field, and she's going to be talking with Katie, another local business owner, about liability of an independent contractor versus employees.
Hello, I'm Emily, another traveling reporter here at KBTX. Today I have Katie, another small business owner in the area, and she's going to talk to us today about employer-employee liability. Katie?
Hi Emily, thanks for having me. So first off, employers are never liable for independent contractors, which is probably why so many employers try to pass off their employees, because it cuts down on liability. But with employees, because they are acting as agents of the employer, the employer, the principal, is responsible for their actions. So there's three main situations in which they are liable for the employee's actions. And that is when the employee is acting within the scope of their employment, when the employer exercises negligent hiring and retention, and when there's workplace harassment.
Okay, and can you explain a little bit more what acting within the scope of employment means?
Sure. Acting within the scope of employment is when the employee he does work that he's directed to perform, or kind of implicitly directed to inform. Like, for example, if a company loans its sales staff vehicles to make sales calls, and the employee uses this car to go out partying for personal use and then has an accident, obviously the employer is not liable because he was not doing what he was supposed to be doing. But on the other hand, if these cars are loaned to the sales staff so that they can take clients out for dinner and drinks, and then the employee has an accident, the employer would be liable because he was doing what he was directly instructed to do. And then kind of another one is if that employee happened to blow up a gas station while on his way to pick up the client and take them for drinks, the employer would be liable because having gas in the car to take your clients out is a necessity to fulfill what you're directed to perform.
And so are there any deviations or maybe exceptions to this?
Yes, there can be deviations, and the three questions you must ask are, was there a deviation at all? Was the extra mile, was it way out of the way, or was it close? And then you have to figure the degree of deviation. So did I drive 10 miles away or 1 mile? And then was this was an extra errand that occurred with the accident, was it reasonably foreseeable by the employer? Does the employee stop for donuts every day? And this, so then he had their accident.
And so you mentioned that the other one was another liability was negligent hiring or retention. Can you expand a little bit more on that?
Yeah. The most common example of this is when the employer is held liable for the employee's criminal acts. And so basically this happens when an employer hires an employee to be in a position that would give them victims based on their criminal background. So for example, if you hired a guy to drive an ice cream truck, and in the past he's been accused of sexually assaulting minors, that would not be ideal to have him selling ice cream to the children. So that would be a case where the employer would be liable for the employee's criminal acts and negligent, keeping them on when you see that they're...
And then the last one was harassment in the workplace.
Right. So this doesn't include just the simple teasing and offhand jokes or one instance occasions. These are more of the discriminatory harassment, and the employer is held liable unless it can prove that it exercised reasonable care to prevent and promptly correct any harassment, and that the employee suffering the harassment failed to complain to management. And employees can't just establish a policy; they have to establish the policy and distribute it to all other people, and enforce it on a day-to-day basis, and they have to set out procedures for making complaints and such. And if they don't do that, they will
be liable. All right. Well, thank you for teaching us that, and back to you all in the studio.
Wow, Katie, that was a great interview. I didn't know that the employer could be held so responsible for its employees like that.
I know. I mean, it makes sense why so many small business employers would want to make their employees independent contractors and limit that liability. So in our next interview, we have a local CPA who will explain the tax effects of having an independent contractor versus an employee.
Hi, I'm Emily, and I'm here with local CPA Bob Brown, here to talk to us about what the tax implications are versus having an independent contractor and an employee. Bob, what kind of taxes does a business owner expect to pay?
That is a great question, Emily. Well, employing people in a business is usually pretty costly for business owners because of the taxes they have to pay. So a lot of the times they want to have independent contractors rather than employees. And the employer is responsible for withholding taxes from employees' wages. Also, they're responsible for like FICA and Medicare taxes, which Social Security and Medicare. And a lot of times they're responsible for unemployment taxes, also known as FUTA. And those FICA taxes, 6.2% are for the Social Security and 1.45% for the Medicare, and that's just for the employee. And the employer has to pay double that, so that would be 15.3% total.
So what would you say would happen if an employer misclassifies an employee, and what are the tax implications of that?
Well, if the employer misclassifies an employee, they're not paying their taxes. So obviously the government is getting cheated out of their funds that they're supposed to be able to get. And as for the employer's liability, the employer is responsible for 1.5% of the employee's wages. Also, the employer is liable for 20% for FICA and Medicare penalty of the employee's share, and the employer is liable for the total employer share of FICA and Medicare, which is 15.3%. And the employer is fully responsible for the employee's taxes if he intentionally does not withhold taxes from it. As for the employee will be totally liable for his or her taxes, even if they're not withheld.
So can you kind of give us an example and walk us through how this would really happen?
Actually, I have an example right here. Okay, so we have Joan, and she works part-time and makes $10,000 a year. The employer is treating Joan as a self-employed independent contractor, and she pays her own income taxes and self-employment taxes, which we talked about earlier, which is the 15.3%. And the employer has issued her a 1099 form, which is the form that employers send to the independent contractors as how much they've earned during the year, rather than the W-2 that is sent to employees. And Joan's 1099 tax return is audited, and she's reclassified as an employee by the IRS. So if Joan has failed to pay the correct amount of taxes, she's liable for those taxes. But the employer needs to pay 1.5% of the employee's wages. The employer is liable for 20% of the FICA and Medicare penalty that the employee's share, and the employer is fully liable for their share of FICA wages, which comes out to a $1,068 for in penalties.
Wow.
Riveting stuff, I tell you.
Riveting. Back to y'all in the studio.